but just a few months back it was 8888. So the fall really has been swift and has been crunching. We have Mayuresh, Joshi and Amrish Palika joining us for closing chat. So Mr. Sukhani is also back with us. Good afternoon, gentlemen. Amrish,
good afternoon.
well, you know, our job is to report, so you know you'll be in better position to tell us.
Good afternoon for the Bears.
Good afternoon for the Bears for sure, Amrish. But look, what next? Because the options data is indicating we might not be done yet. But we were talking to you in the break, and you believe that we may have overshot already in today's trade.
It seems overdone.
Okay.
But then this does not mean that we may not see a follow through tomorrow. It's very much possible, looking at the sort of a momentum which is on the way down. The capitulation which we are seeing can continue for a while longer. But then does it mean that one needs to completely stay out and just watch? I don't think so. I think it's really time to start nibbling in, especially for those people whom I had made them sell in the last 2.5, 3 months. I've been saying at every point of time that this is possibly time to exit. I mean, the markets may not really cross 8,600 levels. Time to get into cash. I mean, if you have sold at that point of time, I think now is the time to start nibbling in. I'm not saying put the whole cash at this moment, but start buying slowly at this point of time.
You know, that's about individual stocks, but when we were having this discussion a couple of weeks ago, there were a lot of people indicating that, you know, when the markets go back to 7,800 to 8,000, it will be a good level to increase your allocation to mutual funds, good level for retail investors to put in some more money. Do you think this is a good time?
This is a good time to start. Yes, absolutely. This is a good time to start because you really can't time the market. And I mean, in case you keep waiting, you will keep waiting. I mean, even when the markets start to move up, then you'll say, I've seen 7,500, 7,600. I'll not invest now at 8,000. So I think one should keep investing at every fall, because I think that's the best way for retail investors to keep investing in the market.
Okay, Sonia, just a word on what's happening in the options market, and here again I come back to what the FIs have been doing for the last 3 or 4 days. The kind of money that they have made in F&O market over the last few days with the kind of shorting in index futures and buying of put options, the same trend has continued today. So the only respite for market, or only hope for the market, would be that at least today the trend changes a bit or stabilizes a bit in US market. If we have another bad day for US market, F&O data is indicating further downtake. You know, all the positions of 8,100 and 8,000 have now been shifted down to 7,500 and 7,400 puts. So you know, if it was not an expiry week, I would have been a bit more sanguine about the market after today's fall, that even maybe the market would have recovered. But because this is an expiry week, right now, I think we're done with the global part. What we're seeing right now is just money playing, you know, exactly, the local capitulation and the smart money making, you know, sure that with the kind of ammunition that they have, they're going all out and making more incremental money.
Yeah, as Nimesh was telling us a while back, there's a lot of you know, HNI and retail money, retail investors throwing in the towel, especially on some of these stocks where they must have made quite a bit.
Oh yes, and for last many days, if you just have to see the NSE data, they've been buying every dip for last 3 or 4 days, and they've been buying the dips on index futures, they've been buying index calls, they've been writing index ports. So that is where a lot of traders are stuck. Let's get Mayuresh also in this conversation. Mayuresh, you know, no point talking about individual stocks as of now, but for overall market, from a portfolio investor point of view, do you think it's time to deploy some money? If you have waited out on the sidelines all through this rally, is this correction good enough to deploy some money?
Clearly, I think after the carnage we witnessed, yes, I think incrementally, if you have not invested into the markets, a 10-15% allocation should rightfully go into the markets. As Amrish was mentioning, I think it is more global at this point of time. And yes, I think the pain might continue for this week at least, with expiry also around the corner. But again, I think this gives opportunity at least to get into qualitative stocks, which a lot of investors are actually waiting to buy probably on dips. I think it has given them the opportunity now. So from a portfolio allocation perspective as well, I think yes, the 10-15% allocation on the fall that we've seen today is probably some ripe opportunity that one can get into the markets.
Alright, stay on guys, we just have 1 minute to go, and let's just give you a summary of today's trading session in case you haven't seen it already. It's been a complete carnage on the Rao Street today. The Sensex is down more than 1,600 points and goes home with a 6% loss, the Sensex and the Nifty. The Nifty has given up on all psychological levels. First 8,000 was gone, then 7,800 was gone very swiftly. recently, and now we closed just around that 7800 mark at 77.99. Just to give you a list of stocks, there was intense pressure on heavyweights today. So look at Reliance down 10% today, SBI, ICICI Bank all down about 10 odd percent, and then you have two spaces that completely collapsed. That was metals and oil and gas. So in metals, Vedanta, Tata Steel go home with 13 to 15% losses. In oil and gas, GAIL and ONGC go home with about 13 to 14% losses. ONGC, GAIL, Cairn, all of them sitting at fresh 52-week lows. By the way, some news: IOC's OFS has been fully subscribed, so that's the latest coming in over there. We sort of know who must have bailed them out, LIC perhaps, and that liquidity pressure again will hit the markets. So that's something to keep on your radar. Apart from that, you have a lot of banks that came under pressure. The bank Nifty has seen a 7.5% cut today. ICICI, Axis, SBI, Bank of Baroda, nothing was spared. That's the list of losers. I mean, I wasn't even looking at gainers because there are none to talk about.
There are none, Sonia. In the mid caps also, there are how many stocks in F&O? I think there are about 170 or 180 stocks. I don't know the exact number, but all of them were in the red. And let's talk about some of the big losers in trade today. First, let's talk about some of the so-called high-quality stocks. Wockhardt was down 22%. Eicher Motors, look at that. Look at the chart of Eicher Motors. 8% lower finally for Eicher Motors. MRF finally ended down about close to 7% lower. 10% lower actually by the end of the day. So big sell-off in late trade. SRF 17% lower. Then come your usual suspects. Amtech Auto 25% gone after 50% fall last week. So Amtech Auto was down another 25% in today's trade. India Cement was down about 20%. HDIL, Adani Power, Century Textiles, Jain Irrigation, Reliance Communications, DLF, JSW Energy, IDBI Bank, Indiabulls Real Estate, Bank of India, Reliance Infra, these are all double-digit percentage losers in today's trade. OBC, Adani, so many stocks in fact. Syndicate Bank, Apollo Tyres, look at Apollo Tyres chart. That stock was down 15% in today's trade. Let's see how CEAT did. That's been the rank outperformer in this market. 12.5% gone for CEAT as well. Arvind was down about 13%. Again, is struggling to pick up any kind of winners in today's trade. If we take a look at the top traded list of 50 stocks, not a single winner in that entire top traded list. Let's look further and see if there was any winner with decent volumes in today's trade. Not really. NMDC just about in the green for NMDC, the final closing rate, but really apart from that, not a single stock in the green. Cash market volume 27,000 crore is what we had in cash market, and F&O volume of 5.5 lakh crore. A lot of secondary market liquidity domestically taken out because of IOC FPO, and today being chosen as the day for that. The final closing is above 7,800, but that's because of adjustments of last 30 minutes. The last closing rate for the Nifty was below 7,800. Let's get back to our guest then. Sudarshan, so 6,800, you've already scared a lot of people, but any timeline for this? Even if the market has to say recover tomorrow or see bouts of recoveries, any timeline that you have in mind for your 6,800 target?
Yeah, it's not scary. We were talking about the fact that 7,900 was taken out today, and if in that event a much larger pattern gets confirmed, and that has a target of 6,800. Targets are not sacrosanct. They may or may not come. So, but at least there is a roadmap available. The timeline, it could be anything. It could be December, it could be next year, March or February. I don't think it's going to come. I hope it doesn't come in September.
Okay, that point is taken. Mayuresh, what do you do with some of these big gainers of the year who came in for selling pressure today? So, names like BPCL, Lupin, HCL Tech, Maruti, they're all down about 3 to 8% today, but big gainers this year. Would you buy any of these names now?
Very selectively, Sonia, and clearly I think there have been rank outperformers, as you may mentioning, for reasons of their own. So Maruti, I think the story still continues, but again I think the concerns being raised if monsoons are subpar, you might have issues at least on the rural side of sales. So I think it's more an urban story for Maruti. But clearly I think all the stocks that you're probably talking about, I think any further declines from the current level, incrementally I think yes, some money can go into all these stocks. People are actually waiting, as I mentioned earlier as well, on the sidelines, waiting for corrections to happen on the stocks. And clearly if you look at the overall picture, I think unless you're talking about demand deaccelerating for the Indian economy overall, I don't think numbers are going to change that much for a lot of these companies that we spoke about. So whether it be Maruti, whether it be HCL Tech, a lot is being said about their numbers in terms of how the wage hikes will probably have impact on debit margins. But the order book has probably held up for HCL Tech. The engineering services division is where we believe the growth will come through in the next phase. So clearly, I think further corrections, valuations will look attractive, and yes, incrementally, I think some money can be put in. But again, one must really buy on dips and in small quantities because you're not really sure where the markets are heading, at least from a short-term perspective.
Okay, Amrish, if you were to deploy say 20-25% of your portfolio of your money in stock markets today, what would be 3 or 4 stocks that you would be comfortable?
So in fact,
would it still be mid caps, or would you rather now want to
be a mix of both. It will be a mix of both.
Okay.
It will surely be the sort of stocks which you talked about. Maruti, say another 5% down from here, I'll pick up Maruti. Lupin. Reliance, I think it has fallen decently well. I think at these levels one should be looking at buying Reliance, L&T, Engineers India, Tata Motors. I think the list is huge. Yeah. And to a certain extent, I have clearly deployed today.
Amrish, you spoke about Maruti. It's down 7% today.
Yes.
A large part of the story is the yen equation. And today we have seen yen gain quite a bit versus dollar. And while rupee has corrected against dollars.
Also, Maruti was, expecting to see this kind of move at some point in time. So they have increased their localization of spare parts. In fact, now their exposure to the yen has gone down to just about 15% on direct and indirect imports, versus about 20 to 25% it was earlier. So that point also sort of buffers the exposure it has to the yen.
It does, but a large part of the rally was because of that. So I think there's still a bit of a risk that exists on that. Sudarshan, a word on Maruti, rank outperformer, but of course today everything fell. But is this one stock that you would keep on your radar in terms of buying if it falls more, or do we now enter a situation where traders have to sell stocks where they have made money, so even some of these stocks fall?
I think some of these stocks may fall. What we are watching for and we have to look for is the markets to stop falling and consolidate. That is the point at which, but then whenever that happens, Maruti should be on our buy list. So yes, Maruti, Sun Pharma, HDFC, which has fallen so much, but doesn't matter. These are stocks that you, even for the short term, should be on the buy list. We shouldn't be going short in them.
Okay, by the way, those statistics are quite scary. So the Nifty closes at the lowest level since 17th October 2014, and listen to this, it's the highest ever one-day fall that we've seen in absolute terms on the Nifty, the Bank Nifty and the mid-cap index. So we've never seen this kind of a fall on one single trading session. Amrish, you think that it's perhaps, if you look at the glass half full, it's perhaps a good thing that in one swoop the poison is out of the system, or do you foresee a lot more downside?
I mean, that's what I said in the beginning, that it seems overdone. So I think maybe it can continue for a day more, but I don't think you'll see this sort of a fall, at least in the near future. So because of which I felt that possibly it's time to start at least nibbling in at this point of time. And again, we should remember that at least fundamentally Indian economy, nothing has changed other than the currency depreciation in the last 15 days. The story hasn't changed. So I think it is more of a technical issue which we are facing as of now. Even the currency depreciation on one side, on the other side you have the commodity prices also cracking. So I think it will more than balance it out. So overall I really don't see the India story changing. So I think this is an opportunity.
Okay, this is an opportunity. Mayuresh, 2 or 3 stocks that you would recommend buying?
So clearly, Anuj, after the fall, the private sector banks have come down to levels that one was not really imagining that they would come down to. So I think Axis Bank, ICICI Bank, Yes Bank, all these 3 banks probably are looking quite decent. And again, I think one really must understand that there is no definitive reason why they've fallen so much. So yes, I think there might be concerns related to how credit growth pans out, the asset quality. But again, I think they are largely unscathed in the results that we've seen so far. Similarly, I think on the NBFC side, LIC Housing has corrected very decently from levels that we'd seen a couple of weeks back. So any further corrections on that stock also, in my opinion, becomes a very good accumulating opportunity.
Okay, gentlemen, well, it was a hard and long day for the market, and especially a hard day for the bulls. The Nifty goes home with a cut of almost 500 points. Gruesome as gruesome can be. The Sensex down more than 1600 points. We haven't seen this kind of a move in a very, very long time. But we'll take a break. Thank you for joining us and giving us your views on the markets. When we come back, the currencies were not too far behind. In fact, currencies are facing a contagion effect from the global equity rout. So we'll get you a check on the money markets with Lata on the other side.